to On My Way to Wealth, the podcast where busy Gen Xers can learn financial tips as they navigate life on their way to wealth. And now, please join your host, Luis Rosa.
Hello, everyone. Welcome to another episode of On My Way to Wealth. My name is Luis Rosa, and I'm your host. Today, we're going to be talking about tax saving strategies for the self-employed. And I have none other than my main man, Carter Cofield. He's a certified public accountant who is dedicated to helping entrepreneurs save money on taxes. He spent years learning the best tax saving strategies so that he can teach them to entrepreneurs and business owners everywhere. He's also the owner of Cofield's Concepts, which is a financial literacy website teaching people how to make more money, pay less taxes, and be their own boss. You can check out his website and podcast for free resources at cofieldsconcepts.com. I'll be also sure to put that in the show notes so that you can have a direct link to it. So without further ado, thank you very much, Carter. Welcome.
Thank you for having me, Luis. I'm so excited to be here today and give your audience some value. So, let's do it.
Oh, I know you will. Thank you so much. Well, before we jump into tax saving strategies, just for our audience, can you tell us a little bit about your background and how you got to where you are today, who you work with, and the type of work that you do?
Yeah, so it was a pretty interesting journey. So I grew up on the south side of Chicago, kind of a very impoverished neighborhood. Made it out through there, went to the University of Illinois where I got my CPA. Then I, made it to the big four firm, right? ended up working at KPMG, which is like my dream job. Like, when you were in accounting, you work at the big four, you made it. And then about, 2-3 years into it, I'm like, I don't like this anymore because I was working like 80-hour weeks and it wasn't that fun. But I did love the accounting and tax knowledge that I was getting. So I ended up leaving the firm and started my own business, which was Cofield Advisors, which is a financial services and accounting firm. Did that for like 4 years. And now at this point, I realized how many other people need the financial literacy and financial guidance I was giving to my clients, which kind of led me to start Cofield's Concepts about 1.5 years ago, where it's a online financial education podcast, resources, courses, masterclass to teach people everything I learned in my years of practicing and teach them how to save money on taxes, how to earn more money. And I really believe in entrepreneurship. So I also teach people how to start the business of their dreams and how to do it the right way.
Yeah, and that is something that is super needed, especially now during pandemic era. I think a lot of people find themselves unemployed and maybe finally taking that leap to say, hey, I'm just going to go after this passion I've had and maybe now's the chance, right?
Absolutely. I believe in the quote that life is not about what happens to you, it's about how you respond. And the pandemic, it was a pandemic for a lot of people. It was what they call a bandemic for a lot of other people, meaning a lot of people ended up starting businesses and just running it up. Like a lot of people ended up having the best years of their lives during this. So I'm a firm believer in you make the most of what you're given.
I love that, man. Yeah, so it's like you taking control of the situation and just learning from it, right? So what are some of the biggest mistakes that you see some self-employed people make? Yeah,
so, we can even take a little step further back and because a lot of people don't even understand what self-employed means, right? A lot of people are like, employees. So for me, you either also 100% self-employed, meaning that you are the sole provider of all your income. But even a lot of people that have side businesses as well, they work full-time and have side businesses, also need to know the pros and cons of being self-employed. So for me, that's my just basic definition. But when you're self-employed, I believe that your financial picture changes dramatically and it becomes a lot more difficult to maintain if you don't pay attention to what's happening. So one of the main things I think self-employed people don't realize is that once you go into self-employment, you're now responsible to pay self-employment taxes, right? Which is additional 15.3% on top of federal and state, right? Because when you're an employee, as well as I do, Luis, you get paid, they snatch taxes out of your paycheck and you get what's left. But when you're self-employed, you're kind of responsible for understanding the taxes that you owe and the taxes that you're going to be subject to paying come April 15th.
Yeah, I appreciate you bringing that back because you're right. There are some people who might be in that situation, not even necessarily consider themselves to be self-employed. But technically, even if you're doing rideshare or you're delivering for these food delivery services, you're getting a 1099, you're getting some side money. Technically, you are considered self-employed for part of that income, right? And you might have to do, if you're not incorporated, you'll do a Schedule C on your personal tax return, and then you have to account for that income. Plus, like Carter mentioned, self-employment tax. Now you're both considered employer and employee, so you're responsible for both halves of Social Security and Medicare. And there are some things that come along with that perhaps you should be doing throughout the year to make sure that you're not in a jam at the end and end up owing a lot of money, as well as keeping track of certain expenses throughout the year. So, yeah, let's go to that, Carter, because I know that a lot of people now, especially with the pandemic, may have kept their jobs, but then also started doing some sort of side hustle, right? So what are some of the things that people should be on the lookout for during the year that they should be kind of keeping track of if they are, in fact, earning some sort of side income?
Yeah, so that question just reminded me of the number one thing I see the most, right, in my accounting career is people coming, and Luis, you probably see this as well, people coming to you in April, like with their 1099s, right? And you file their tax return and they see this huge tax bill, right? Because they didn't plan, they didn't save anything, right? They didn't plan for anything. And, they get this huge tax bill. They say, wait, I thought they take taxes out of my paycheck. Like, no, you're self-employed now. You're now responsible for this. And it's a huge, huge problem when they see this 5-figure, maybe even 6-figure tax bill, right? So one thing that we need to be cognizant about is that once you're self-employed, whether that's rideshare, whether that's doing stuff for Postmates, whether that is renting your apartment on Airbnb, or whether that's you being a full-time business owner, you absolutely must save a portion of every dollar that you make for taxes. So I recommend that if you don't have a CPA by your side, or you're not doing any tax planning, you need to be setting aside at least 30% of every dollar you make for taxes. And on top of that, you should be making your estimated tax payments on those estimated tax payment dates, so that when it comes tax filing time, you're not sitting there, for lack of better words, with your pants down and have this huge tax bill, because the IRS knows something very, very well. And that's, if they don't take the money from you, you're going to spend it. So that's why they want you to make these estimated tax payments. So that's, at least in my experience, what I've seen.
Yeah, that is so true. And, in addition to having that huge tax bill, you might also end up paying penalty for under withholding, because the IRS wants a cut of the money you're making throughout the year. They don't want you to wait until the end and pay, or actually maybe they do, because they will charge you a penalty. So they'll get a bigger cut. But ultimately, that's another thing to look out for. And you're right. When I work with some clients that have come to me that were not clients before, and they just self-employed, and they just come and say, hey, yeah, I got this 1099 income from the side business or even their main business, and they didn't send any estimates throughout the year. I mean, they have a huge tax bill, penalties on top of that. And that's one of the biggest hurdles to get over, because now you owe money for the year before. And then I'm telling them, well, to avoid this next year, we got to do some form of strategy to pay your quarterly tax bill. And now you're paying both the taxes from before, because maybe you can't afford that huge lump sum if you didn't plan properly. So now you're on a payment plan with the IRS, which you can set up, if you don't have the means to pay the full amount by April 15th, but there will be penalty and interest, because the amount is due April 15th. So even if you extend your tax filing deadline, the money's still due April 15th. So you're going to start paying interest from that date. So keep that in mind. You don't want to get yourself in a jam where you're now paying an installment agreement with the IRS plus estimates for the following year, because that is a big bill, and it's a very hard climb to get out of, without a doubt. So you got to do some planning, like Carter says. Ideally, you want to pair yourself up with a professional, like a CPA or enrolled agent or a financial planner that has some tax specialties, so that you don't get jammed up at the end of the year. So the tax quarterly estimate deadlines are April 15th, June 15th, September 15th, and January 15th. Usually when you do your tax returns, you could either get a payment voucher to make these, or you can do like Carter says, which I actually prefer that method, and say maybe 30% or so from whatever you earned that quarter, and make sure you make that estimate throughout the year. So thank you for sharing that, Carter.
Yeah, no, and I love it, because a lot of things is that people don't understand what their estimated tax payment should be. And I love to make it as simple as possible, right? So when you file there's two ways to calculate it, Luis. I'm sure you know this. You either do 100% of last year or 90% of the current year's income. So the easiest way to do it is just take whatever you owed last year, divide it by 4, and make those payments every quarter. Now, you might still owe a little bit more, but at least you know you made the minimum requirement to not get penalized.
Yes, that is a great strategy. Yeah, and then there's a small little exclusion, I believe, for people that make over 150 grand. That goes up to 110%. So be on the lookout for that for sure. If you're, good problem to have, right? If you're making over 150.
And I actually have this saying, and Luis, I want your opinion on this. I believe there's 2 tax seasons, right? There's tax planning season, which is September through December. And there's tax paying season, which is January through April. And if you do your job or do your due diligence, meet with your CPA during tax planning season, you won't be upset during tax paying season because you did what the proper steps to do to make sure you minimize your tax liability.
I love that. I think I'm going to borrow that from you.
It's yours. It's yours.
That's the gem right there. You are so right, because if you wait until the tax filing deadline, you're only looking backwards. Like, there's really not that whole, there might be a couple things you might be able to do, but at the end of the day, it's like, all right, we're pretty much stuck with the decisions we made during the year, with the exception of a few. But you don't want to be backward looking. You want to be forward looking, which is so important for you to do tax planning throughout the year, because there's so many different strategies that you could do ahead of time to minimize that tax bill and take advantage of the tax code that is there for you to basically use to your advantage, right? There's no law that says you're supposed to pay the most taxes possible, right? So there are things in the code that you can take advantage of legally in order for you to have, your successful career and also minimize the taxes at the same time. So I really love that concept. I'm going to start using that. 2 tax seasons. Thank you for that. That is awesome. So in addition to paying their own taxes, the other thing I tell self-employed people is like, you're also responsible for saving for your own retirement, because you don't have a 401k that's being provided by an employer like some people do with an employer match. There's no pension. So if you don't put money away for your future self, nobody else will, because you're getting to keep whatever money you keep from your business, and then that's it. It's up to you to save. So now you have taxation. That's one thing you have to worry about. And then you have to worry about creating your own golden goose, as they say, so that you have enough money for later. So what are some of the things that people that are self-employed can do to save for retirement?
And Luis, so here's what things get fun, right? And I mean, call me a nerd if you want, but I love studying the tax code because it's nothing but an incentive system. And if you follow it, you have dramatic tax savings, at your disposal. So on one hand, being self-employed makes your tax and your financial picture more complicated. On the other hand, it gives you more control. So to your point, let's talk about retirement accounts, right? So if you're an employee, as you know, you can only put away $19,500 in your 401k this year, right? 2021 rules?
Yeah, if you're under 50.
Under 50, right? But when you're self-employed, that thing changes because you now have the option of starting your own retirement plan. And one of my favorite is a solo 401k, right? So a solo 401k allows you to be the employee, both the employer and employee of your plan. And now you go from being able to save $19,500 to up to $56,000 per year per spouse. So if you and your spouse have a business together, you can multiply that by 2. And now you're looking at $112,000 you can put into a 401k each and every year, obviously based on salary requirements, things like that. But my point is you have a lot more flexibility and you can save for retirement so much faster being self-employed versus being an employee.
Yeah, that is such a great point. So when we look at the taxes, you're responsible for both halves of the Medicare and Social Security. That could be looked at as a negative, but then there is a positive where you're still you're considered both employer and employee on the business side, the retirement planning side. So you can contribute your $19,500 to your 401k, let's say in this case a solo, and then also the employer portion of that. So you can basically like match yourself, right? With some limitations based on salary and your net self-employment income. And one of the things that Carter mentioned, which is amazing, even if you're self-employed and you're solo, if you hire your spouse, you can still continue to have a solo 401k and both contribute towards that, which is amazing. So if you do it right, do the right planning, you can save a ton of money on taxes throughout the year and also put a lot of money away for your retirement, which is a win-win.
Yeah, I actually have not to cut you off there, I have a client that when they came to me, they had no retirement plan, right? They had an amazing business, no retirement plan. In 3 years, it's a spouse, him and his spouse. In 3 years, their their retirement account is now over $300,000 in
Amazing.
3 years.
Amazing.
Right? So they went from no retirement to more than most people have in 3 years. And that's just one of the benefits of being self-employed.
Yeah, that's amazing. Yeah, and that's so powerful. Imagine just the 300,000 in 3 years. Imagine the compound interest on that over, the next 15, 20 years. It's going to be your own private pension.
Yeah, I'm about to say, they're set. They're good.
Yeah. They just got to keep it up. That's awesome, man. So, and I love that you bring that up. So let's talk about a couple of more of strategies that I hear clients bring up all the time that could help them. So for example, one that you told me about that you see a lot of your clients do is like when they take business trips. And I think you call it wrapping up the weekend, right? Can you tell us a little bit about that?
Yeah. So again, I'm all about tax saving strategies because they're there if you decide to study them and learn about them. So, Luis, outside of me being a business owner, my favorite thing to do is travel. So one of my things was like, how can I turn my personal trips into business trips? So I did a lot of research and I found this part in the tax code about wrapping a weekend. And basically what it means is that if you go to a destination, so let's say you want to go to Miami, right? To have a good time for the weekend, just, you personal, whatever, Saturday and Sunday. If you were to go there on Friday and find some business activity, and by business activity, I mean, meeting with a potential client for lunch. I mean, I'm going to a conference, having a business lunch with a colleague or social media team, whatever. If you could find business activity that Friday and on that Monday, you are now allowed to deduct all lodging and meals expenses over the weekend. So it's instead of just flying in on Saturday and leaving on Sunday, fly in on Friday, meet with somebody, and then leave on Monday, meet with somebody again. And now you're able to deduct the flight there and back, all lodging expenses from Friday to Monday, and all meals. And in 2021, meals are 100% deductible.
Wow. Wrapping up that weekend. That sounds good to me. Especially Miami.
Right. No, for sure. So, one thing I encourage my clients, before they take a trip, I always, encourage them, let's find some business activity. So one of my clients is a photographer. She just put on Instagram, who's in Miami that I can shoot. She shot a couple people. And now this $3,000 that she was about to spend on this trip anyway, she's lavish. This $3,000 that she was going to spend on this trip anyway was now an expense that we can deduct in her business account as a tax write-off.
Nice. Man, that's dope. Another thing I've seen people ask me about too is like when they have children that they want their business to hire. Can you tell us a little bit about that? Some of the advantages of doing so and what you've seen in your practice?
Absolutely. Now, this strategy is a little bit more complicated. I highly, highly, highly encourage people that want to implement this strategy to have a CPA or at least somebody who knows taxes on your side with this. Like, don't go into this alone because it's slightly more complicated. But the overall strategy for this paying your children tax-free is this. The IRS allows you to pay your children from your business account if they are actually doing work in the business, right? So if they're actually doing work, you can pay them up to $12,400, and that money is tax-free to the children, and you get a tax deduction in your business, right? So how does this work? So due to the fact that the standard deduction is now $12,400, I'm correct, right? It's $12,400, right?
Yeah, $12,400 for single individuals, yes.
Yeah, so it's $12,400. So because the standard deduction is now $12,400, when you pay your children $12,400, the standard deduction is going to wipe out that income on their tax return. So they're not going to have to pay taxes on that $12,400. And because your children are employees of your business, you get to deduct that $12,400 against your business income as employee expense. So now you're able to pay your children, get a tax deduction, and the money comes to your children tax-free. And then if you're a smart parent, you won't really give the kids the money, right? Because they don't know what to do with it. You put that money into a Roth IRA for them. And now you're able to grow money tax-free that has never been taxed in the first place.
Gotcha. Yeah, yep, absolutely. That's a really cool strategy. The Roth IRA, basically, you're putting after-tax money for those of you listening. And basically, if you hold it for a minimum of 5 years and wait until age 59 and a half, all that money is tax-free. You can always tap into the amount that you contributed yourself and get it back tax-free. If you take it out before age 59 and a half, then you have to pay taxes and penalty on the earnings of that. But if you're doing that strategy, it's hopefully with the eye on not having to touch it until later. But that could be a really good strategy where you just take, at a very young age. If you start a Roth at a very young age like that, as a young kid, you have to have earned income. So obviously, if the kid has to work in the business. And, like Carter said, make sure to speak to your CPA because there are some variances there with the standard deduction if the child is claimed on your taxes versus not being claimed, et cetera. So be sure to speak to your CPA about that. But that could be another great strategy. So I'm glad you brought that up. Another question I get a lot too from self-employed individuals is in terms of the S Corp. A lot of people that are single member LLCs, they usually hear something about, hey, I heard something about this S Corp that can save you money on taxes. Like, what is the S Corp election and how does that benefit an individual that goes that route?
Yeah, this is actually a perfect segue. So like when I spoke about the paying your children, there's a few things I want people to know before we hop into the next one, because I hate giving advice without painting the whole picture, right? Because that's not fair. So one, it works for people if they're in an LLC, right? But if they're in an S Corp, it still works, but you can't avoid all taxes. You still have to pay the self-employment part. So I wanted to touch on that piece to understand, like, if you're LLC, you pay your children, you have to pay them with payroll. If you do that, then you get the full tax deduction. But if you're S Corp, you can still do it, but you actually have to pay a portion of the FICA taxes. But with that said, let's focus on the S Corp strategy, which is honestly probably one of my favorite because it's pretty easy to implement and the tax savings are ridiculous. So the way it works is this. At least, as you know, if you are self-employed, you have to pay, we just talked about, you have to pay federal taxes, state taxes, and both sides of self-employment taxes, right? So if you're an LLC owner making $100K, right, you talk about 25% federal tax rate, maybe a 5% state tax rate, plus another 15.3% self-employment, you're paying taxes on 45.3% of your income, which is insane, right? Like, so the S Corp strategy allows you to avoid a portion of your self-employment taxes, right? There's nothing we can do about federal and state, but there is something that we can do about how much self-employment taxes we pay. So the way the strategy works is that first of all, to implement the strategy, you need to be making over $40,000 in net income. And the reason you need to be making over $40,000 in net income is because when you convert to S Corp, there are some costs associated with it. One of the costs is your tax return cost is going to go up. And another cost is you're going to need a payroll provider. So a payroll provider is probably going to be about $600 a year. Your tax return probably is going to go up from $500 to maybe $1,500. So you got a $1,000 increase there. So you want to make sure that the savings outweigh the cost of having an S Corp. And around that $40,000 net income number is when it starts to make sense. So now that we get that out of the way, if you're a business owner and you're making over $40,000 net income, then this is the strategy you need to employ sooner than later. And basically, the way they employ it is you make what's called an S election. And basically, you have your CPA fill out form 2553, and it basically makes your S Corp, you're still an LLC, but you're not taxed as an S Corp, right? So once they file that form, you're now taxed as an S Corp. And when you're taxed as an S Corp, you now can pay yourself a salary from your business. And whatever you pay yourself a salary with, that gets hit with self-employment taxes. But whatever you don't, that avoids self-employment taxes. So for ease of use, let's just use a $100,000 example. So let's say someone making $100,000 net income, they would normally have to pay 15.3% self-employment tax on that, which is $15,300. But if they're S Corp and they pay themselves, let's say they pay themselves a $30,000 salary. So the $30,000 gets hit with self-employment tax, but the other $70,000 completely avoids it. So you're saving whatever 15.3 times 70,000 is, that's how much tax savings you're able to have each and every year.
Yeah, and that could be a very, very large sum of money. So again, like Carter said, make sure you speak to your CPA because you have to pay yourself what the IRS considers a reasonable salary.
Reasonable salary, yeah.
So it depends obviously on the industry that you're in and the type of work that you're doing. But yeah, that could be a a very good strategy for you to just pay yourself a salary and then get the profit. You get issued a K-1 tax form from your own business, and then you just pay ordinary income taxes on that, and you avoid the other half of the self-employment tax now, which is great. So speaking of paying yourself a salary, this is another strategy that I've used with clients in the past, even when they're not S corps. Just from a cash flow standpoint, I've seen a lot of people that get themselves into trouble because they're used to having very uneven cash flows. So for example, somebody like a real estate agent who doesn't necessarily have a steady flow of income. The have 3 closings this month, no closings next month, then 5 the next. So very uneven cash flow. So what I usually tell them is, let's put you on a salary that is fixed. Do a budget analysis first, figure out how much money you need to pay all your bills. And eventually we create a system where you have at least 3 months worth of expenses in that account, for example, at a minimum, so that you can have enough time to pay yourself every single month, whether or not you had sales, right? And then you keep on replenishing that. Ideally, you will work to a bigger number, but let's say 3 months to begin with. I'm using a real estate agent as an example. Usually within 3 months, they'll have some closing within that time frame. The reason for that is because then what I found is my clients and say, I've been able to manage my money better because now I'm paying myself a salary and I'm operating as an employee of the business. And you can always pay yourself a quarterly bonus. So maybe every quarter you decide, okay, I have this much income. I'm going to send 30% to the IRS for estimates. I'm going to do 10% for my solo 401k. And then the difference I'm going to pay myself as a bonus. That's one way to do it. And now you're being more structured and you're being more proactive with your money. So you're helping yourself by having that cash flow structure, right? So that's another strategy why at some point you want to work towards paying yourself a salary from your business as well. If you could do it under the S Corp strategy, even better, because then you're going to have additional tax savings on top of that. So that's amazing, man. Thank you, Carter, for bringing that up.
Yeah, and not to cut you off there, but first of all, I love what you said. And I used to actually implement that in my business because my clients are creatives and their income is sporadic, right? Because they might get a $500,000 check 1 month and then it might not get paid for 6 months. So one thing I want to encourage your audience to listen to, have you heard of a book called Profit First by Michael Michalowicz?
I have.
Yeah. And just the Profit First system is so important for every business owner to have. And I won't ruin the book for everybody, but basically it's to allocate a certain percentage of your monthly income every single month to separate accounts. So, and I do it for my business, right? I have percentage of my money every month goes to taxes, a percentage goes to paying me, a percentage goes to reinvestment to the business. I give 5% of every dollar I make to charity. And it helps me so. Me as a CPA, I had bad money management skills in my business because it's a lot going on. But once I implemented this Profit First system 3 years ago, I don't even have to think about where the money needs to go anymore because it's on an allocated basis. And if I have a good month, I get paid well for my business that month. If I have a bad month, well, guess I'm paying rent and eating ramen noodles. You never know. But I love not having to think about it.
Yeah, I love that. And it's like you put yourself on autopilot to some degree, right? And then you make adjustments as necessary. So I'm going to put a link in the show notes for the Profit First book as well for those of you that are interested in reading it. I love the fact that you have some charity in there as well. Because that's
the secret to living is giving, man. If you can't find a purpose bigger than yourself, I feel like one day you're gonna have issues waking up every morning with happiness and with an urgency to do something. So I'll give. I'm trying to get that up to 10% over time, but we'll see.
That's awesome, man. Yeah, that's commendable, man. Congratulations on that. I love that. This has been wonderful, man. I think I got so much from it. I can't wait to just listen to the episode myself. Because there's always some great nuggets in here. For those of the people, the audience that may never get a chance to speak with you, what are some things that you would say? I'm starting a business or I'm running my own business. What are some key basic concepts that you would say, look, at a very minimum, these are the things that I highly recommend that you do to make sure that you ensure yourself some success in your business?
So a few things. So first and foremost, I actually created a free Start Your Dream Business Masterclass where I go over most of these. So I'll send you the link so you can add to the show notes. It's 100% free, but I think it'd be great help for your audience. So to answer your question, where do I want to start? I would just say, one, go into something that you're passionate about, because being a business owner is tough. I'm not here to paint roses. I went $30,000 in credit card debt my first year. Like, it was tough. I'm in a place of abundance now, but it's very tough. Secondly, I would say you want to know a good price for your services or products. And the best way I found to find good pricing is to do pro bono work, meaning do free work for people, and then ask them how much they would pay for something like this, right? Because a lot of entrepreneurs, we suffer from imposter syndrome. Luis, I don't know about you, but I really did. And I started off charging pennies on the dollar because I didn't know my worth. And it went up over time. But if I would have just allowed other people to price for me based on what they thought, I probably would have got to where I'm at faster.
Yeah. Wow. That is so powerful, man. And, now that you mentioned pro bono, because I know you mentioned you give away 5% and you're looking to building that to 10, for those of you listening, if you are charity inclined, right, but you don't have the means right now, well, maybe you can give time as well. Instead of giving a percentage of your profits, maybe you can do just a couple of hours, a quarter or whatever towards a cause that you believe in, help others. And at the same time, yeah, like Carter said, I love that idea, do some pro bono work, so you're helping some people. And then you can use that as part of research as well. I'm like, hey, what is this worth to you? What would you pay for this?
Here's the kicker, Luis. When you mess up, because you will mess up, you will suck when you start. It's inevitable, right? We all were there. People are not upset when you mess up for free work because they knew what they were getting themselves into by signing up for free work. So it allows you to get past the mistakes that you're ultimately going to make and not really have not mess up your reputation because you did it for free,
Right. Yeah, no, I got you. Yeah. And people are generally understanding like, hey, listen, man, I missed this, but I'm going to rectify it. Here's what I'm going to do about it. That's a good point. And not to leave you hanging, I want to go back to what you said about imposter syndrome. Yes, I have definitely been there, definitely undercharged for sure. Something that I have definitely struggled with in the past, and continue to evolve. I think a lot of us listening, and I think sometimes it has a lot to do with if you're doing work, for example, like sometimes you might help a friend out or a family member, you might not want to charge like your full price, which, I understand that obviously, but sometimes that carries over to like other areas. And you have to think, you have to run a business that is profitable. Number one, you won't be able to help anybody if you're not profitable because ultimately you're going to go under. And number two, one thing I found is that people don't value the things that they don't perceive as valuable. So if you're giving away free advice all the time or undercharging for your services, you best believe that very likely they're just not going to follow it as much. So even if it's a smaller portion than you normally would charge, you still want to charge somebody for your services because they will learn to appreciate it and they're more likely to listen if they're paying for it.
If you don't pay, you don't pay attention. You know how that goes. If they don't pay, they don't pay attention. And I love what you said, but we kind of end with this, but like people only gonna value you as much as you value yourself, right? So if you value yourself at $25 an hour, which kudos to you if that's how much you feel like you're worth, people are going to treat you as such. But if you hold your shoulders high and say like it's $500 an hour to sit and talk with me, and you actually understand your value, people are going to respect it, and they actually think you're more of an expert based off how much you charge. That's the way the world works. People look at expensive things to be the highest quality. So to your point, once you start valuing yourself, you'll be able to price your services accordingly.
Yeah, very well said. And one thing that I've learned from Carter too is that the great thing that comes from being specialized. We were talking about this before. So I mean, like, try not to be everything to everyone. When you have a specialty, like you work with XYZ person and you become an expert in that area and you have your repeatable process and you're adding value, you're solving a problem, you have an answer to a question, then you can charge more for your services because you are a specialist, right? The knee surgeon can't tell you anything about your cholesterol, but he can fix your knee, right? So think about it that way, right? Lawyers do it, doctors do it. You should be doing the same in your business. And this is something that might not come easy to you. It's something I've kind of gone back and forth with. for years, and I continue to refine, and hopefully one day I get down to a very specific thing. So I'm still struggling with that myself, but
me too.
Recognize
me too. I mean, we're not perfect. Me too.
Yeah, I recognize the value in that. So Carter, for those listening, I will be putting all this in the show notes, but for those listening, where can we find you online? What website or social media can people follow you on?
Absolutely. So if you go to cofieldsconcepts.com, which I'm sure you'll link to in the show notes, you'll see everything, all my podcasts, my free resources, things like that. And if you want to follow me on Instagram, it's just Cofield_advisor. I'm always giving free tips, free gems. Those are the 2 places I'm at.
Nice. I love it, man. One last thing. How do you define success?
Oh, I got a good one for you. You're going to write this down. So I just read it in a book yesterday, and I'm writing on my wall. So success is not defined by how long you spend time doing things that you love. I define success as how little I spend time doing things that I hate. So I'm absolutely, just adamant about every hour of every day I should be doing something that I love. If I don't love it, I offload it to somebody else who does love it. And I judge success on how many hours of my day am I not happy. And that's my definition of success.
I love that, man. That's the flip coin to the usual.
Yeah, exactly. Yeah, I read it in the book. I'm like, hold on, I gotta write this down.
That's amazing. My previous episode 58, it was about the power of saying no, how successful people use the power of no. And you're hitting the nail right in the head right there. Because I was like, wow, when you said that, I was like, yeah, that basically that translates to how many hours I can say no to things, basically. If I'm saying yes to what I don't like, then that measures part of your success philosophy, right? So I really love that. Thank you for sharing that.
No problem.
Awesome. Well, thank you everyone for listening. Thank you so much, Carter, for being with us on the show. This has been amazing. I can't wait to, again, listen to this episode myself. So I appreciate it. Thank you very much, my brother. And everyone, thank you for tuning in. Remember to always consult with your own CPA, tax attorney, or enrolled agent for your own specific situation. This has been for education purposes and information purposes only. Thank you all for tuning in, and we'll see you in the next episode. Thank you for listening to On My Way to Wealth. If you have any questions, please send me an email at luis@onmywaytowealth.com. The information provided here is for information and education purposes only. The opinions expressed herein are solely those of myself, unless otherwise specifically cited. Material presented is believed to be from reliable sources, and no representations are made by my firm or myself about other parties' information or accuracy or completeness. All information or ideas provided should be discussed in detail with a financial advisor, accountant, or legal counsel prior to implementation. Thank you.